EUR GBP is hovering near 8-month lows around 0.861 as euro weakness persists against the pound. The key level is 0.86 because a clean break could turn a slow decline into a deeper technical move. For viewers tracking EUR GBP price, the useful read is the pressure point, not a broad market mood. The confirmed headline centers on euro and 0.861, while the first practical question is what it changes for FX desks. The second number to keep nearby is 0.86 because it shows the scale or timing that makes this story more than a label. That keeps the opening simple. The event is real, the consequence is specific, and the next step depends on the evidence that follows. The pressure comes from weaker eurozone momentum, relative UK resilience, and expectations that the ECB may ease sooner than the Bank of England. The pair is near 8-month lows around 0.861. Resistance sits around 0.865 and 0.87. This context matters because the story is not floating on rumor alone. It has a clear status, a known actor, and a measurable anchor. The second confirmed piece is how the event connects to pound and hedgers, which narrows the story from general crypto noise to a concrete market or user effect. The card-level baseline uses 0.855 as the supporting signal, but the script treats that number only as far as the evidence allows. Nothing in this baseline should be stretched beyond the stated facts. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Currency divergence works through growth and rates. If investors expect lower euro yields and weaker data, they demand fewer euros against sterling. In plain English, lower expected euro yields weigh on the pair. Data divergence keeps sellers in control. That mechanism is why EUR GBP price is more than a headline. It tells viewers where the pressure travels, through access, liquidity, policy, user trust, custody, or settlement depending on the story. The mechanism also explains why support test and rate spread matter more than a broad price reaction. If ECB changes position, or if 0.86 appears, the mechanism gets a clearer stress test. Importers, exporters, travelers, and FX desks exposed to euro-sterling face pricing risk around support, resistance, and central bank catalysts. Hedgers face pricing risk near support. Travelers benefit when sterling stays firm. The affected side is therefore not every crypto holder in the same way. It is the group closest to euro, the product or market connected to pound, and the users who must act on the changed condition. For FX desks, the practical concern is tied to 0.861. For hedgers, the pressure usually appears through access, cost, timing, or confidence. That is why the practical consequence matters more than a generic bullish or bearish label. Bearish setup is not a guaranteed breakdown. Stronger eurozone data or a hawkish ECB shift could force a short-term rebound. A bearish trend can still bounce from support. Central bank guidance can reverse positioning. This scene is the guardrail against turning an incomplete story into a prediction. The confirmed part is the event and the supporting facts. The unresolved part is the follow-through, whether the response, approval, recovery, liquidity, policy step, or user behavior actually appears. The open item is best summarized as support hold, and it should stay separate from 0.86 until a fresh confirmation point appears. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is whether 0.86 holds, followed by ECB and Bank of England guidance, UK inflation data, and eurozone growth numbers. Watch 0.86 hold. A break opens the path towards 0.855. For EUR GBP price, the clean close is to track the signal that can change the story rather than guessing the final outcome. The path from low to data is the simplest way to follow the next phase without adding unsupported claims. If that signal arrives, the market or user effect becomes easier to judge. If it does not, the story remains constrained by the current confirmed evidence.